Hello everybody, welcome to episode 5. I'm going to be applying the model fractal across all time frames in this video. I'm going to walk you guys through a top-down analysis approach. So in episode 2, you learned the change in the state delivery model. In episode 3, you learned how to find a higher time frame bias using that change in the state delivery model. In this video, we're compiling them both, and I'm going to provide you a simple checklist to get into a trade. The thing that's different in this video is we're going to be reviewing ICT's trade from the other day. So I'm going to show you guys how I have personally reverse engineered ICT's trades. This has given me the most precision, really studying what ICT is trading, why, what time, etc. So I'm going to be walking you guys through an entire checklist of that. And it's super important to keep these checklists kind of simple, especially to get into a trade, because if you have 10 steps on your checklist, you're going to get analysis paralysis and you're not going to have confidence to get into a trade. So let's start off by taking a look at one of ICT's trades from the other day. So really what I'm going to do is I already have a checklist on this tab, which we're going to fill out. And this is kind of a good way to study ICT's trades. You want to focus on the time factor. Is he trading in a macro? We're going to talk a little bit about macros in the next lesson. What kill zone is it? And then price. What's the higher time frame bias? Was liquidity taken? What's the model entry? What is he trading? What is his stop loss placement and why is his stop loss placement there? And where is he targeting and why? So it's really just understanding what he's trading. You start to see this repeating phenomenon in all of his trades. We're going to be taking a look at this one. If you want to look at it on your own, it was 1 day ago. You can click on his profile and click on the ICT trade executions playlist. He has about 24 on there. I have looked at pretty much every single ICT trade. I've done this for the last 9 months, just really trying to figure out what ICT is trading. Because sometimes you look at this and you're like, whoa, there's no 2022 model there. And with my mind, I kind of need to understand what he's doing. It's that OCD. So we have the NQ execution 1050 to 1110 macro. So we don't even really have to look at it here. You can see that 11 a.m. that's the macro that he is trading. So this is in the AM session. So the kill zone is the AM session. So you have the AM session, the PM session, and then the lunch session. AM session is from 8:30 to 11 a.m. PM session is from 1:30 to 4 p.m. I remember in a recent video he may have said you can extend that to 11:30 in some situations. Sometimes I do see some good setups there. I don't typically follow the kill zones. When I see my model in price, that's enough for me to get into a trade, but I will use these as confluence. And sometimes if we do get large expansion in the AM, I will keep in mind that lunch can be choppy. Or if we have a choppy AM session and a choppy PM or a choppy lunch session, then we could likely see expansion in the PM session. So we have the AM session as the kill zone. This is between 8:30 to 11 a.m. What macro is he trading? Well, he says it right here. He's trading the 1050 to 1110 macro algorithm. So if you look on the chart, that's where that is. So the macro is 1050 to 1110. Now ICT hasn't really taught much on macros, so it's not like I could come on here and act like I know 100% about macros, but from my experience and from reverse engineering his trades, these macros are used to, and from what he's taught so far, these macros are used to either expand price towards liquidity, or you can get changes in the state delivery during these macro times. So between the 1050 to 1110 window, there's a potential trade setup that forms, or a trade setup has already formed and it's going to be expanding towards liquidity or to rebalance an inefficiency. What are some other macros? So we have the 850 to 910 macro, 950 to 1010, 1050 to 1110, 1150 to 1210, and then in the PM there is the 250 to 310, and I'm not sure any other ones in the PM. You do have the 130 macro, 315 to 345. Again, we'll talk a little bit about them later in the video. So let's get started on this. I'm not going to press play. It's 8 minutes long. I'm just going to kind of do this where I skip ahead a little bit. If you notice where ICT enters, he enters at 16,743.75. So you may look at this and be like, well, why didn't he wait for a market structure shift? Well, ICT does not need a market structure shift. He knows what the algorithm's going to do. He has 30 years of experience in this. But why did he enter right there? So that's kind of like the main question I ask when getting into it. Okay, like what time did he trade? Why did he enter there? And then once I see why he entered, I go onto my own chart and I try and study that. So we have 16,743 1.75. And why is he entering there? Is the bias higher on the higher time frame? Because he's usually trading in the direction of where price is already heading. So if we go into a chart over here, this is where the trade setup forms around this area. So I'll do a top-down analysis real quick. You can see on the daily time frame, all price did was reprice back down lower. Notice how this right here, it doesn't look like a breaker because there's the last down close candle. And then if you were to mark out this, price doesn't tap into it. A lot of times if you see a down close candle like this, like I still consider this to be a breaker. It just doesn't show on this time frame because we have a low, high, lower low, then a higher high. In this price leg, there's going to be a breaker on the lower time frame. So I'm not just marking out this, going down to a 16 hour now, and that's why I'll scale between different time frames, because notice how this is a breaker now. So that's why you see me have so many different time frames on here, because I like to get the overall perspective and not just rely off of one daily chart, because smart money is not just trading off of the daily. So we have these two up close candles in here before price makes the high. Two up close candles that make the high. It makes a lower low, then it makes a higher high. So all price did was reprice back to the breaker, and then it started to expand away from that. So in the beginning of the week, though I was a little bit more bearish and I wanted to see price trade a little bit lower, notice how I was quick to realign with order flow. I am not scared of being wrong. So if price starts to expand higher, well, I'm going to get on side with that move. I'm not just going to be like, oh, I said I think it's going to go down here. Now I have to trade in the direction of that. No, I want to align myself with order flow. So price is repriced back to the breaker. We can go down into a lower time frame now. So this was a 16-hour breaker. If we go onto a 4-hour chart, okay, I don't see any change in the state delivery here with the fair value gap. So typically I'll go into a lower time frame. So see how there's no fair value gap right there? Well, then I'll go into a 3-hour. No fair value gap there, 2-hour. And then it's there on the 2-hour. So I don't necessarily have to use these classic 4-hour, daily, 1-hour charts. I can scale between these. And that's what ICT talks about in the 2022 mentorship. When looking for a trade model, you can really just scale between the 1 to 5 minute when using a lower time frame. So I said, hey, why not use that on the hourly time frame? That same logic. So from this breaker, notice price expanded higher. It created a bullish change in the state delivery. So remember, I'm using all of these time frames to frame a bias. I'm not just going on to a daily. A big barrier for a lot of new ICT traders is ICT has talked about daily and weekly bias. You cannot always frame daily and weekly bias. And that's where a lot of people get messed up, because they're always looking on the daily for bias, but sometimes there is no bias. And because you see a bearish 2022 model on the daily, though this can play out, right, you're only trying to trade in the direction of that daily 2022 model, when this could just be repricing back to the breaker and expanding higher, or it's just a retracement before heading lower. I don't know in here yet, right? So that's something to avoid. If you just see a 2022 model on the daily, right, that's not enough for me to have a daily bias. This could head lower. I don't have a daily bias in here right now. But what I'm saying is that you can go onto a lower time frame and really read order flow. So price repriced back to the breaker. If we go onto the 2-hour, it was, we had a change in the state delivery. So these 4, 1, 2, 3, 4, there's 5 in a row. We have a fair value gap breaking through. I like to see it break through the high of that. And this is a bullish change in the state delivery. So what did I teach in the episode 3, I believe it was, where price creates this change in the state delivery, but price has been bearish. So what you can do is you can wait for price to trade higher and then reprice back lower to the order block. And see this last down close candle? Okay, that could be a sensitive point of the order block too. Why? Because that's the inception of when price delivery started higher. When price breaks above this, right, that's where it starts the delivery higher. We also do have that lower wick there. But when price returns back to this could be a sensitive point. Ideally, I'd want to see it respect the open of here. But if it doesn't, it can still respect the open of the lowest down close candle. So the entire range from this candle's high to this candle's low is the bullish order block. This is a sensitive point, the last down close candle. When price returns back to that, notice this big wick. In one of ICT's executions that I reverse engineered, he talked about when price returns to here, trades into it and we get a huge wick and then price starts to expand away from it, if he was bearish, he wouldn't want to see this down close candle respecting this order block and then start to expand away from it. This is an algorithmic signature that price is likely to trade higher. So it starts to trade higher, we start to expand higher. This over here, if you look on Monday, though I was expecting lower prices, really want you guys to study this because this is the exact reason why I changed my bias. And then I was on side so far the rest of the week because I'm not trying to stick to what I originally said. I'm letting the algorithm prove to me what it wants to do. Then I want to get on side with smart money. So return back to the order block, expand it higher. You'll notice this is where I turn bullish in here because we got that inspection of that order block. Now I know some of you guys are like, I thought he was looking at ICT trades. I am, but I just need to show you guys the inception of this price move because this is where the trade was framed for ICT. So this is where we turned bullish. Okay. Price starts to expand higher. Using the change in the state delivery model down here, it returns to buy side, but just because it returns into this level of buy side liquidity, that is a very minor level of buy side. So sure, it could reverse in here, but remember, it's been bullish since over here, and it's been expanding higher. So if we look at the 1 hour now, price has returned above this buy side. Okay, there's two things that could occur here. Well, actually, there's three things. It could either just expand through it. It could see a retracement to induce retail short and then expand much higher. Or it could see a long-term reversal there. How do we know which one it's going to do? Well, price takes out the buy side. If we look on a 30-minute, why am I using a 30-minute? Because I want to, or even a 15-minute, I want to see liquidity from the left side. So I'm just going to scale down to a lower time frame in here. We have a 10-minute, see this level of sell side liquidity, takes out that. Okay, price starts to expand lower and then it expands up higher here and it starts to disrespect some of these PD arrays. So if we notice where ICT got in, he got in at around 1050 to 1110. So that's right around this price area. And notice what has happened. It was bullish on the higher time frame. Order flow is proving it was bullish. It returns above buy stops, trades back lower. It takes out this level of sell side liquidity. If you look at this low over here, it took out sell side and it created an SMT. So if you know the market maker model, what this can indicate, since the higher time frame was already bullish, is that since price returned beneath sell side liquidity, created a bullish SMT and is expanding away from that. And what did it also do? It created a change in the state delivery. So we could use a lower time frame change in the state delivery here, or we could use a higher time frame one. If you look at a 30-minute time frame, it took out the sell side liquidity, created a 30-minute change in the state delivery. So broke above this order block, creating this small little fair value gap in here. What does this indicate to us? It indicates that price is going to start attacking buy stops. And what has been bullish so far? Order flow. It's tapped into the order block on the 2 hour. I keep saying 3 hour. Turns into it. And it's just expanding. Notice how it's failing to rebalance or reprice back to this. And it's just returning back to a fair value gap in here and then expanding away from that. The fact that it's failing to retrace back deep is showing that it's in a hurry to get somewhere. ICT talked about, I believe it was in a core content, that price will typically, when you do get these large inefficiencies, price will want to reprice back to the high end of them to rebalance that price range. So from this candle's high to this candle's low, it only offered sell side delivery. That's a likely draw. If you look yesterday, that's where I was anticipating for price to hit, and it hit it around, what was it, last night, something like that. So that was my higher time frame draw. Why the 9 hour? Well, just because the fair value gap looks clean on that time frame. So we just have a large inefficiency. If we look on the hour or the 8 hour, you could use that as well. 6 hour, I mean, it would be this high. I'm just kind of capturing the entire imbalance here. But again, order flow has been bullish. It returned beneath sell side liquidity, created a SMT divergence, expanded higher, disrespected this bearish fair value gap, disrespected this bearish order block, disrespected this bearish fair value gap. So 3 PD arrays broke to the upside, something you could use as confluence. ICT says if you're bearish here and 3 PD arrays break to the upside, you're likely wrong with the bearish bias. So I can incorporate that into my analysis. Price expands higher, creates the 30-minute change in the state delivery. So it's likely to start targeting the buy stops above. And since order flow is already bullish on the higher time frame, right? What we can do is we could target the inception of the retracement down. So notice how this started the retracement lower. It returns back to 15-minute sell stops, creates SMT, pumps back up higher with the market structure shift. What we could do now is we could target the inception of that retracement. What's the inception of the retracement? This is where the retracement started to the downside. That's going to be the original consolidation. Since the higher time frame is already bullish and we're anticipating for price to rebalance this inefficiency up here. So this is our 9-hour FVG high. Since we're anticipating for it to reprice back to there, we can target the inception of that initial retracement down. That's when you know to target these highs up here. So that's why I targeted those the other day as well. Okay, so all that being said, that's why I came up, or that's why this is the bias higher. So we need to get that out of the way. So the higher time frame bias is bullish. Okay, and I'm not going to type it out all in text, but you guys know why it's bullish now. Change the state delivery, beneath sell side liquidity. It's likely to target the engineered liquidity. So we perfectly have these cluster of highs here. So the bias is for price to trade up to here. Note this level. This is 16,811.25. So this is when you'll see me put that little eyeball on my chart, because that's where I think price will reprice back to. Now we can go on to a lower time frame. Now we're going to skip ahead or go back to what ICT is trading. So he's on the 1-minute chart. So I like to look at what time frame he's looking at. If we skip it ahead, where is he targeting? 16,811. Let's go back to this chart. What was this high? 16,811.25. So this is exactly what I do at my trades. I have my take profit either, not exactly, but I'll either have my take profit exactly on the buy side level, which would be 16,811.25, or I have it even one tick below sometimes, just to ensure that when price sweeps it, you get filled, because you want to make sure that price goes at least one tick past your limit order to ensure that your limit order gets filled. So that's why he has his right up there. He's using the idea that price is going to target the buy side liquidity. So let's skip it ahead again. We're gonna come back to his entry, 16,743.75. We're gonna skip it ahead here. Look what he marks out. See these 3 consecutive down close candles with the fair value gap? That's a bullish order block or a change in the state delivery. So he's not anticipating for this low to get swept. Price created a change in the state delivery higher. So he's at, look where he adds more at. So he has 10 contracts in. Price returns back to this order block, which is also, there's also a breaker here. He's anticipating for that to be respected because order flow is bullish, and if buy side is being targeted, down close candles should be respected. He's also trading within the 1050 to 1110 macro. So we're just going to skip this ahead here. Notice where he trails his stop. What did price do? It repriced back to the order block and expanded higher. Before we get into that, let's scale down to the lower time frame and take a look at this. So remember, this is the bias up here. Okay, so he's using a 1-minute chart. If we go into a 1-minute time frame, I want you to study what price did over here. This is the 30-minute order block. Price returned back to this minor level of sell side liquidity and expanded away from that and created a change in the state of delivery. So if you study my entry as well, you'll notice that I got in somewhere over here. Using the same idea, price created a change in the state of delivery, fair value gap right there. If you look on a 2-minute, created a fair value gap right after the order block. So sometimes if I'm looking at a 1-minute time frame and it doesn't create the change in the state of delivery or the fair value gap right after the change in the state of delivery, I'll go to a different time frame because here it did. So if you were just looking at a 1-minute, you're thinking, all right, well, it's invalid now, but that's not true because look at the 2-minute, created a fair value gap right there. Price returns back to that order block. This is significant because this order block swept liquidity, expanded higher, created a change in the state of delivery. So right here, price creates sell stops by engineering them. So we have these cluster of lows. Okay, I'm going to delete these in a second, but look what happened. Price returned back down to them during the 1050 to 1110 macro. It purges the liquidity, and then it starts to expand higher. So what exact time did ICT get in at? Well, he got in on, what was it, this candle? think he got it on this candle. Let me skip back. Yeah, so he gets in as this candle's forming down at 16,743. So this is ICT's entry. 16,743.75 was it? Yeah. So this is what you guys should be doing to really understand what ICT is trading. And like I said, there's not a trade that I haven't seen of ICT unless it's just not on social media, because I've spent so much time reverse engineering these concepts to really understand what he's trading. Price returns back to the order block here. You may say, well, Dan, he doesn't wait for a change in the state delivery here. Here's something that might be interesting to you. You don't have to wait for all the up close candles to break. Now, some of you guys are going to hear that and you're just going to try and go in every time it breaks above this down close candle. When price breaks above one down close candle and doesn't even create a fair value gap, that's significant enough for ICT to enter. It does not mean that you should go in and just try and buy every single time it returns above this, because a lot of the times you can get little fake outs. See this one right here? It went above it and then that failed. So it's easier to just use the model that I taught, which is change the state delivery. ICT talked about this very, very vaguely in the 2022 mentorship. It was either episode 2, 3, or 4. I can't remember. If one of you guys are interested in that, just let me know and I could send you the link for it. But all he hinted at was a change in the state delivery is when price moves from buy to sell program or sell to buy program. I have made a model out of that because it's more significant than a market structure shift. You need this for a true market structure shift. So he doesn't need for it to close above here. Since he's already bullish and he's already anticipating, we'll delete these levels because he's anticipating for it to reach all the way up into the buy side up there. Price creates a change in the state delivery here after taking out sell side from the left side. This low is already protected. Okay, so we're not anticipating for that low to get traded to. Price returns back down. When price retests an order block and expands away from that, what can occur is a potential propulsion block. So this is where ICT enters at. Let's make it just the same color. I'll make it blue as well. So this is ICT's entry. He enters in here. He doesn't wait for it to close above there because it already retested the order block and broke above this down close candle. This becomes a propulsion block. Okay, I'm telling you, just do not start going into the market and trading every time it trades above this up close candle. You will get faked out a lot and still have the right bias, just like this happened right here. What can happen is it fails and then you think, all right, that should have worked. Now it's targeting the low over here, but that's not the truth. It just went for one more run on stops. So it's best to just stick to the model that I taught. You're going to have more precision with it. Once you understand it more, then maybe you could transition and start dabbling into this. I'm only saying this to save you because I know what it's like to see this and get excited and then just start going onto the chart and just getting wrecked. So he's anticipating for price to trade higher here. As soon as it trades above this order block, right? This is a propulsion block. Why is this a propulsion block? Because it retested. I'm going to make this black. Because we have a order block that retested a previous order block. So price closes above it here. ICT enters in this blue area. And he's anticipating for price to trade higher now. So if we look at ICT's entry over here, that's exactly what's going on. Look where his stop placement is. He's not anticipating for that low to get traded to again. So if we look over here, the higher time frame is bullish, right? It did take out liquidity. It took out sell stops, but it took out the sell stops. It was like a minor level of sell side liquidity. So it ran 2 levels of sell stops, ran this one over here and ran this one. Again, I'm using liquidity from the left side. Okay. Model entry. Okay. He's using a change in the state delivery. He's just not requiring all of the candles to break to the upside because he's not anticipating for this low to get traded to. Then once it retests the order block and expands away from it, it's likely to expand higher from there. Now this low becomes protected. So that's likely not to get traded below. Why does he have his stop loss down here? Because he's anticipating for a fair value gap to form as price is trading higher, and he doesn't want price to trade beneath here. If it trades beneath here, it would be disrespecting the open of that propulsion block and trading towards mean threshold. He doesn't even want to see a larger tracement there. So if you look where his stop is, it's 1733. Sorry, 16733. I always get these wrong. So this is, we're going to make it the same exact colors. 16733. So that's where he's anticipating, or that's where he's not anticipating for price to trade to. So let's skip it ahead here. If we just speed it up real quick. So he trailed his stop there, right? Price starts to expand. Remember, we had the higher time frame bias. If you let this play out a little bit, right? He's anticipating for that propulsion block. Now this entire range from this candle's high to this candle's low, the 3 consecutive down close candles, he's marking this out. It's an order block, but it's classified as a propulsion block because it's retested a previous order block. So he's anticipating for that to now act as support. So you notice that ICT trails his stop up here. Why does he trail a stop as price is expanding higher? Because if we skip this ahead, oh, it's not working. There we go. It has retested this propulsion block and then expanded away from it, creating another fair value gap. So now this low should become protected. It doesn't mean every single time it's not going to run back on those stops, but that's the logic he's using here. And it's for your own study to go in and try and figure out when it works, when it doesn't work, and just collect data on that. But that's the idea here. It's retested the propulsion block, expanded away from that, and it's already tapped into this breaker. He doesn't want to see that retrace back down, because if it retraces back down to this low, well, then at that point it has the potential to run these two lows, so that he doesn't want to see that area get repriced back to. So if we skip this head, he's saying prefer to see this unfilled. We have an order block here. Okay, this is an area where he's looking for price to respect. He doesn't teach much about breakaway gaps. Breaker here, price expands higher, trades into it, and then it hits the buy side objective. So if we go back to this checklist over here, what he used for the entry is price breaking above the 1 down close candle. He's using that as the change in state delivery, anticipating for it to create a change in state delivery by breaking above all the consecutive down close candles. Stop losses beneath this previous low down here, which ends up forming a fair value gap. He's not anticipating for that to get traded to again, because in the model I've taught so far, when price creates a fair value gap, you don't want to see that low get repriced back to. Plus, if price were to create this large up close candle and then eat that all up and come back down to here, there's a good chance it'll head for that previous low in there. So for the stop placement, I would say near low of changing the state delivery, and it was also the fair value gap. This was candle number 2 low. Target, he's using the higher time frame bias. Higher time frame bias buy side target. So far what we have, ICT trading in the 1050 to 1110 macro. In the AM session, the higher time frame bias was bullish. Price ran out sell side liquidity, created a change in the state delivery. He had a stop placement near the low of the change in the state delivery, which was also the fair value gap number 2 candle. And he was targeting the higher time frame bias target. And then along the way, he was anticipating for bullish PD arrays to be respected. That's why he's marking out bullish PD arrays. He's also trailing a stop beneath these order blocks and beneath bullish PD arrays once price expands away from it. If we go back to this chart over here, you can see if we skip it ahead, it does end up trading up to there. So this was the logic I was using on my trade, except I got out earlier than him. I can't remember if I believe I got out at this 30-minute high when I was trading this. Just gotta let it load in real quick. Okay, yeah, I was using the first buy side level, but you could also been targeting the extreme high up here. Since we're anticipating for price to trade higher, we're anticipating for all of these bearish PD rates to get cut through. New ICT students, they're going on an hourly chart right here, thinking that price is bearish. I don't know why it's glitching right now. And marking out bearish fair value gaps and such, bearish order blocks. The draw on liquidity is higher, price is going to cut right through those. Going into a lower time frame, you could utilize those to anticipate for price to respect. So we have this bearish fair value gap over here. The bias is bullish. That'll likely act as support, and price can continue to expand through it. So there's a few things that we learned in this video. ICT traded a change in the state delivery at a key time in the day, which is the macro 1050 to 1110 macro. The bias was bullish. He waited for price to run sell stops, create a change in the state delivery, and then if it doesn't always have to run sell stops, like since it ran the sell stops over here, that's enough for when price returns higher, returns back to the order block, creates a propulsion block. He doesn't really need it to run another level of sell stops here because it already did at the inception of that move. So he was trading a change in the state delivery. Stop placement was near the low of the change in the state delivery, and he was targeting the higher time frame bias. So that's going to be it for reverse engineering ICT's trade. I have a little checklist for you guys. Keep it simple. That'd be my best tip for you guys. Look for a higher time frame bias. Where is price drawing towards? Where is it delivering from? Which PD arrays are being respected? Where is the change in the state delivery occur? Things like that. Use episode 3. Look for lower time frame changes in the state delivery at key areas. Let's say key area, sell side liquidity. It's going to be a high probability place to look for changes in the state delivery. And you could also use time. You could utilize as simple as kill zones, as confluence, or macros. That's what I do. Time it doesn't have to be at a macro for me to trade. It's something I'll just use as an extra confluence though. That's going to be it for this video. Hopefully this was insightful, and I will catch you guys in episode 6 tomorrow.